Hi, this is Saturday the 7th, and this is the SPX Outlook for next week. Before recording a new video, I always look at the previous one to see whether I had a good reading, whether things panned out the way I anticipated. And fair enough, last week was a little bit ambiguous because we had a shorter week before and things were cooking and we couldn't figure out exactly where it would go. I mentioned that we could expect something of substance by midweek, and we did. I mean, if you look, this is Monday, Tuesday. We had a good pullback, and I have indicated this support area for a while, and it's exactly where it bounced back. The strength of the bounce all the way up to all-time highs or near them maybe is unusual, but there's a lot of entrenched volatility anyway. So what do we see from here? I mean, okay, we had a short signal and it was actually a pretty strong one, followed by actually an up signal. Let me switch off my strategy to make it clearer. The new information is that we have clearly broken this channel. Now we've moved from bullish congestion to overall congestion, and we have a range that is drawn here that looks pretty clear. We have that strong support. I think it hit about 3067, so it was broadly in this support area from 3060 to roughly 3080, and we still have that very salient level on 3125. It was tested a few times midweek, and then on Friday it went sharply up. I can repeat that, of course, we have more or less a 40-point gap in quantic moves. So 3025, 3065, this is actually fairly strong support. There's one higher. I mean, if we look at a fib expansion, it can go all the way to 3090, which I've kind of drawn here. So we have a range, and so we may be moving from bullish congestion to congestion, and it will go back into bullish grind up mode if 3165 is broken. This is possible. I would say that the market will hesitate, but we always have a kind of a end of year rally at the same time. Will the large hedge funds start, cashing in on the profits for the year? It's difficult to say. So I anticipate that the trend, overall trend on the daily chart is still valid. And we will see whether 3155, 3160 is being rejected. Again, we had some rejection on 3125. It went up on good NFP. Good NFP should mean that the chances of lower rates is minimal, although the wages are still very much contained, surprisingly maybe. We can expect a continuum of mixed bag type of news, up and down. There's no real motivation to go much higher. It's really time to take profit. At the same time, we have to be pragmatic. Anything can happen. We will see in the next video that it was actually a good opportunity when the market dipped to enter the February trade slightly ahead of schedule. It was supposed to be done on Friday, 770T. Since we have no capital constraints, it was actually a good thing to enter, and those trades are fine. So, but we will explore that in the next video. So, as far as the outlook is concerned, I would assume, and I would advise not to be too contrarian. I'm not saying that trend is your friend, but we, especially for people who trade like me in a market neutral fashion, we have to accept the bias the market is having, and we will look for a key level, key decision point, where if the 3155, 3165 area is being rejected. So I would suspect that this kind of range trading, this is why I drew that box here, is the highest possible scenario. Otherwise, a little bit of grinding up, and these areas being tested again, that will take a while. So maybe we'll have some interesting market movements, but probably after the festive season. Sometimes it happens on low volume somewhere between Christmas and New Year, but I would not take any movement during that time. Needs to be confirmed early January in general. If we, just before closing, I'm just going to switch to the daily chart. Funny enough, on the daily chart, we have a weak sell signal. So again, it's being contradicted by the up move, which it may be some short squeeze effect. It's difficult to say. To me, the NFP on Friday was not sufficient to justify such an up move. So we will, of course, take into account that this is still a bull market, probably a little bit more hesitant. I would recommend to cover this area pretty well, 3180 to 3160, so about 80 points. So again, we're looking at twice the usual gap. In terms of key resistance area, for those who are familiar with Murray Math type of quantic levels, the yellow line here is a pivot level, which is the second strongest support or resistance, depending which way you look at it. And you can see here with that on the daily chart, we have some range contraction here, which indicates that the 2810 is becoming now a very, very strong support. And the new pivot level is the former resistance level. So, and of course, this is a daily chart. This is not really new. This is from last week. But what I'm saying is that there's not much of a difference between those strong key support resistance, blue being support, orange, red being the resistance. And what I'm saying is that what should happen is that exactly like it happened here, resistance becoming pivot, this could become a pivot on shorter time frames, like 1 hour or below. In saying that, I'm saying that this range could become on a short time frame the 3080, 3160, and this 3125 about halfway being pivot. Generally, the market decides which way it wants to go. So this is of course too big for this time frame. It's even too big for the 1 hour time frame. But here as well, we may see some contraction and see the market evolving either side of this 80-point range. So if the market decides to reject 3150, 3160, the 3125, although it looks like it's penetrated, still acts as a pivot level, which means it can be penetrated, but it is quite important in traders' minds. If it's tested for support and bounces up again, we'll be back into grounding mode. If it goes below and stays below, then 3080 and below will be tested again. So we can actually base our decisions on the way the market handles those levels. If I'm not clear enough in this type of explanations, I suggest you Google up Murray Math lines and their interpretation, or you can of course comment below and I will try and answer in more detail. Right, that's it for now. Thanks for watching, and for those who are on the alert service, I will record the Rhino weekly recap on Monday after market makers are back at the desk, 8 a.m. UK. Enjoy your weekend and see you later. Bye bye.